we have seen how net income and net loss could be distributed among the partners. Now we will look into how is the accounting or the accounts will be prepared based on the partnership agreement. Okay, this is an illustration, so we follow this example. Sarah King and Ray Lee are co-partners in the Kingsley Company. The partnership agreement provides for salary allowances of 8,400 to King and 6,000 to Lee. Okay, so firstly, in the partnership agreement, it is stated that King will get a salary of 8,400 and Lee will get a salary of 6,000. Okay, that is the first component, which is salary. Secondly, interest allowance of 10% on capital balances at the beginning of the year. So the second component is that the partners will be given interest based on their capital balances at the beginning of the year. Okay, so they will get interest of 10% on whatever capital balance that they have at the beginning of the year. So that's the second component. The third component is the remainder will be distributed equally. Okay, any profit left after giving out the salary allowances and the interest allowances will be distributed among them equally. So they will get an equal share of the remaining net income. Okay, so background information is that the capital balances on 1st January were King 28,000 and Lee 24,000. Okay, so King has a capital balance at the beginning of the year of 28,000, whereas Lee has a 24,000 capital balance. In 2017, the partnership net income is 22,000. Therefore, the division of net income is as follows. Okay, so what is required from us is to prepare a schedule showing the distribution of net income. So we need to prepare a schedule that shows how the net income is distributed. Again, we see that the net income is 22,000, but from that net income we need to distribute 8,400 as salary to King and 6,000 salary to Lee. After that, we need to distribute 10% of interest on capital balance, 10% from King's 28,000, which will be 2,800, and 10% from Lee's 24,000, which will be 2,400. After that, any remaining net income from that will be distributed among King and Lee with equal proportion. So how do we do this? Okay, so this is the net income. So firstly, the net income is 22,000. All right. So 22,000, firstly, we will reduce by the salary allowance. So King is receiving salary of 8,400. Ray is receiving salary of 6,000. So 22,000, so 8,400 and plus 6,000 is equal to 14,400. That's the first part. The second part is the interest allowance. Okay, King is receiving 10% of his of her capital of 28,000, which is 2,800, and then Lee is receiving 10% of his 24,000 capital, which is 2,400. The total of the interest allowance is 2,800 plus 2,400 comes to 5,200. The remaining, the total of salary as well as interest allowance is 19,600, which is 11,200 to King and 8,400 to Lee. So the remaining out of this one, the net income is to 22,000. The amount that has been distributed based on salary and interest allowance is 19,600. The remaining is 2,400. So 2,400 is divided among the two. So 2,400 divided by 2 is 1,200. So each one of them, King and Lee, will receive 1,200 each. So as a total, King will receive 12,400, which comes from 8,400 of salary 2,400 of interest allowance, and 1,200 remaining income share. Whereas Lee will receive 9,600. That consists of 6,000 salary, 2,400 interest allowance, and 1,200 remaining balance of income. Okay, so as a total, 22,000 of net income is distributed based on that. So that is how we produce the schedule of division of net income. And then we need to do the journal entry of the net income. Okay, so we close the income summary account. So assuming we have transferred all the expenses and all the income or the revenue accounts to income summary. So we close the income summary account by debiting income summary, but then we credit the capital accounts of Sarah King and Ray Lee by the amount as shown in the schedule of division of net income. Okay, let's assume that the net income is only 18,000. So how do we dispose it? Okay, how do we distribute it? Because when total salary and interest have been distributed, it comes up to 19,600, which is more than the net income, the actual net income. So there's a deficiency of net income now after distributing salary and interest. What do we need to do? The remaining deficiency of 1,600 is divided among the two, which is a negative of 800 and each. Therefore, the total division that each one of them should receive will be deducted by the remaining deficiency. So Sarah King is receiving 11,200 of salary and interest, but then it is deducted by the remaining deficiency of 800. Sarah King will only receive 10,400. Similarly, Ray Lee will receive only 7,600 because although he received a total salary and interest of 8,400, the remaining deficiency will be deducted from that. In the partner's capital statement or the equity statement, it starts off with the original capital. So Sarah King and Ray Lee has a starting capital of 28,000 and 24,000 respectively as at January 1st, and then there's an additional investment. Sarah King has made additional investment of 2,000, but then the net income distributed earlier is 12,400 for Sarah King and 9,600 for Ray Lee. And then from there we less the drawings of 7,000 from Sarah King. Therefore the ending capital at 31st December for Sarah King is 35,400, and Ray Lee has an ending capital of 28,600 after deducting $5,000 that he has already taken as drawings. Okay. In the balance sheet, under owner's equity, it will be shown two accounts, one for each partner. So Sarah King capital will be 35,400, which comes from here, and Ray Lee's capital will be 28,600. That comes from here. So the total owner's equity is 64,000. Okay, so that is how we prepare. Firstly, we prepare the schedule, which is this schedule, and after preparing this schedule, we will prepare the partner's capital statement, and after arriving at the ending capital, we will prepare the balance sheet, and the balance sheet will have the remaining or the ending capital of both partners.